Okay, good morning everyone. It's great to be here this morning. Just by way of a brief introduction, my name's Maria-Yassin. I'm the head of Responsible Sourcing Advisory at SLR Consulting. I've got about 15 years of experience in the commodities industry, partially in-house, and bring that sort of perspective to my role today at SLR Consulting. I'm very much looking forward to what I'm sure is going to be a really interesting discussion this morning. Thought-provoking discussion given the depth and breadth of experience on the panel. So I've got with me Brian. Brian Mannell, who's the chairman and CEO of TechMect. Brian has over 25 years of experience in developing projects in the mining industry, pretty much across the world, in Europe,
have you got a home
North
in
America, and Africa. I also have with me, see who's next?
I have a home in Sunningdale.
Mark Bristol. There is Mark. Fantastic. The CEO of Barrick. Thank you, Mark. He was formerly the chief executive of Randgold Resources, the company built from a small Africa-focused exploration business into one of the industry's most profitable and best managed gold miners. And I think, as people probably know, Mark also played a pivotal role in promoting the emergence of sustainable mining in Africa. So welcome, Mark. It's great to have you. And I also have with me this morning Mr. Rashid Abdullah Al-Rushaid, who is the chairman and CEO of the Al-Rushaid Group. There he is. Good morning. Mr. Al-Rushaid has recently been appointed to 2 government roles as a board member in the Ashaja Development Authority and Mining Partnership Committee, which is part of the National Industrial Development Logistics Program under the Vision 2013. Mr. Al-Rushaid has spent his career to date focused on energy, mining, and the industrial sector, is now a driving force in the diversification of the Saudi economy. Welcome, Mr. Al-Rushaid. I'd like to start or begin our discussion by looking at the supply gap, looking at market developments and specifically the supply gap that we're linked to the energy transition and global electrification. So, Mark, coming to you first. You're also active in copper, not only gold, which is arguably a strategic metal, maybe even if not yet classified as a critical metal just yet. What's your perspective on how and who's going to be closing the supply gap? And specifically, be also interested to hear your view on the capital markets. We don't seem to see much of a signal coming from them just yet in terms of future projected demand.
So, thank you. I think that we've covered a lot of that today already, and the problem is we're not going to close the supply gap if we don't find any more copper, and we have nickel's a strategic metal, but iron ore isn't, and you can't build anything just with nickel, and so there's same with aluminium, and so it can keep going on, and exploration is one aspect in that we've got to find more, and there's lots to find. I think the important thing too is that when you look at mining and you look at its returns over the long term, it's been fantastic. If you take copper, great metal to invest in, and gold even better, beats all the asset classes. But for some reason, our obsession with instant gratification is that we want to invest in something that we can make, or promises to make $1 gazillion by next week. And mining, of course, doesn't bring that opportunity. So it is a requirement, and we heard this morning, I think it led by some of our sovereign wealth partners in the industry, and then it's about governments as well to join the capital markets and creating an environment where investment in these long-term projects really is encouraged.
Yes, great. And that brings me to Brian as a serial project developer. Could I have your thoughts on this one?
Firstly, I think we have to appreciate that as the energy transition accelerates and is unstoppable and necessary, the structural short supply of the critical minerals going into the EV ecosystem, renewable energies, is growing, not diminishing, and is much, much, much more severe than the markets yet recognize, or the end users or government agencies or providers of capital yet recognize. You know, if we just use Tesla lithium demand as one illustrator, if Tesla are to meet their target of producing 20 million electric vehicles a year by 2030, that alone will require 2 times the present global annual supply of lithium. You know, that's before Ford and GM and VW and the Chinese, who are going to continue to produce 2/3 of the world's batteries and electric vehicles, and are growing quicker than those industries in Europe and the US and elsewhere in the world. So this is a massive task. You know, our industry, and lithium's perhaps easier to deal with than some of our other metals, because at least you've got reasonable abundance of primary resource globally, even though the scale, the requirements in terms of technology and capital to adequately scale demand is massively challenging. I mean, our industry across all of these critical minerals needs to utterly transform itself in terms of scale by many multiples over a relatively short time frame, in terms of ESG compliance and carbon footprint, because we want to be a sound contributor to a well-governed energy transition, and in terms of independence from Chinese control, who have had a free rein over the last 15 or 20 years to build an overwhelmingly dominant position across these global supply chains. And this is a transformation that requires many, many hundreds of billions of dollars, and it's not happening, and the gap in supply 3 years out, 5 years out, 10 years out is growing every day, not diminishing every day, despite the massive progress in terms of analysis and understanding and prioritization of critical mineral supply chain security in Washington and Tokyo and Brussels. There's a lot of talk and a lot of analysis and a lot of understanding, but very little action. Big institutions aren't adequately engaging because they still see mining as somehow an ESG PR liability, even though they're all theoretically committed to net zero and energy transition. The big mining companies, and I know Mark is an exception in terms of the scale of what you are doing in copper, but generally speaking, the big miners aren't in our metals and are missing out, are failing the world and failing their shareholders, because they, you know, are much more comfortable digging out iron ore in the Pilbara and shipping it to China and paying billions of dollars of dividends than doing what they should be doing in nickel and lithium and rare earth metals and cobalt, etc. So we've got a long way to go as an industry and as a world, and we need a lot more understanding and support.
Thank you, Brian. Quite a supply gap to fill, and maybe moving our focus slightly away from the more traditional sources of mining that we've just touched upon. Mr. Al-Rasheed, I'd be interested. The Al-Rasheed Group is not exactly perhaps a new joiner in the industry. You've been in mining now for over 10 years, but it's nonetheless a diversification program out of the oil and gas sector, where you're very well known for. So recently, the company has set up partnerships in the mining industry, and it'd be really interesting to hear what prompted that move from your perspective in Saudi. Thank you.
Thank you, Maria-Yassin, for the introduction. We are a diversified group. As you well aware, we're quite busy with quite large projects. And we've actually been in the mining industry for a decade, following 50 years in the oil and gas industry. But there's a lot of synergies between the two sectors, and we're strongly positioned to, show our learnings in the oil and gas industry and adopt them to the mining sector. With our international partnerships now in the kingdom, we've set and joint ventures, of course, we've set a benchmark in the industry, something that I'm personally very proud of. But we feel there's more to come. As the sector grows in the kingdom, we feel there's a lot to see as well. It's important to remember that in Vision 2030, mining was the third pillar after oil and gas economically. With Saudi Arabia having set its goal and target to net zero by 2060, mining is going to be a critical element for this transition. So far, mining has contributed $17 billion to the GDP, and with major government investment and support, there's enormous potential for the industry to sector to take even lead in the minerals security around the world. Something which is extremely essential, I believe, for the energies transition.
Great, thank you very much. We've set the scene now globally, looking at the global supply gap, and I'd like to drill in a little bit more on, well, literally, on some of the specific topics within that. We touched on it already. Brian, you mentioned ESG, for example. So the challenges today, I think, to operate are very multifaceted, and I think no one mining company can probably do it on their own. But you might have a situation where you have all your logistical ducks in a row, but you lack the license, the social license to operate. So the question here is, how can mining companies position themselves effectively to manage a societal and also sort of questions around climate change? And Mark, if I could come to you first here, to what extent do you think mining companies have to become development partners to be successful in this space going forward?
Well, I think the Future Minerals Forum in Riyadh really captures that, and that is, first of all, there's a number of partnerships we've got to develop. The first one, I think, is we've got to appreciate that oil and gas is going to run out anyway, so the transition is set up. And so how do we transition and who benefits? And if we don't ensure that the world benefits, we're not going to make it. Lithium is almost irrelevant in the transition because lithium batteries aren't the best storage for power. So the question is, so we need capital partnerships. We need a partner between skills and capital. And therefore we need skills, which we don't have. And then we need the partnership between host countries or countries that are endowed with minerals and that capital. And then we need the partnership between the developed economies and the emerging markets and underdeveloped economies. And again, we spend a lot of time, particularly in the West, worrying about China and blaming it for many things. But China has got ahead and dealt with stuff, and we need to do the same. Otherwise, I always say, people are always complaining that China is eating our lunch. The fact is that we're not at the table. And so we need to develop and invest in our own future, and capital markets have to be encouraged to make host countries, mineral-endowed countries, more investable. And I think there's some very good examples. Tanzania is recently, again, our commitment to ESG, embracing Tanzania as a real partner, making sure that they benefit on a 50-50 basis from our investments has created a new place to go and invest in many minerals and metals that this world needs. And I think we're going to see more and more of that and the more we do, the better we'll get at it, the more we'll embrace it, the more the world will change. And that, I think, is what we should be talking about rather than trying to build lithium batteries. And I think, to Brian's point, Elon Musk even says there's enough lithium. The question is, lithium batteries still catch a light. That's not the technology that's going to be the battery of the future.
Thank you, Mark. We'll touch on innovation a little bit later on as well. Brian, if I can again ask you as well here for your perspective. Is your observation that these ESG expectations are also sort of more and more baked into, let's say, into investment and into investment deals?
They are, both in terms of providers of capital and in terms of the demands of end users, in the form of the auto industry and others who are selling consumer products with a greenish label and therefore need to ensure that their supply chains are traceable, transparent and traceable and well governed. So it's a very important driver, and it'll continue to be. And it's important for us as an industry to demonstrate and educate the world into understanding that mining can be responsible, it can be well governed and transparent, and it can be low environmental impact and low carbon footprint, and it has to be. Increasingly, it does cost a little bit more and it takes a little bit longer, and it further undermines our competitiveness relative to Chinese funded and built projects who tend to have slightly lower cost of capital, access to cheap state financial support, and lower environmental and governance standards, which is a big issue, and a big issue for Western capital and a big issue for Western governments.
A follow-on question maybe there, Brian. Circling back to our supply and demand conversation earlier on, so would you expect that these ESG principles that are integrated into investment deals essentially will lead to higher prices at the end of the value chain, as permanently so?
Yeah, as they should. It is somewhat inflationary, and it does, as I said, take a bit longer and cost a little bit more to do things right. It doesn't mean we shouldn't do it, but it does mean that we should impose those standards on everybody in order to have a level playing field.
Okay, thanks very much. Just looking at the time. So we've heard, I think, that all of these are very complex, challenging and expensive endeavors. And the question, I think, for me, I've said earlier on, no one organization can probably tackle them all. And what about partnerships? How can industry collaborate to achieve these goals? Mr. Al-Rushaid, perhaps I can come to you first on your perspective.
We've learned out of our experience in the oil and gas industry in the kingdom that the two elements are extremely important, which is the government's support and the localization of industries and contractors. Take Al-Rushaid Group as an example. Thanks to our client and support, and through our associated companies and partners, we've been leading the oil and gas industry for decades. That experience has enabled us to build strong new partnerships in the mining industry. Our collaboration efforts are supported by huge government investments in infrastructure, for example. That is a critical element in unlocking of $1.7 trillion worth of minerals underground. And of course, that's in the Arabian Shield today. As I mentioned, this is one of the goals of Vision 2030, and will help to continue to secure Saudi Arabia's position in the market today as the world's largest and most reliable energy supplier. Above all, we are committed to fostering industry's collaboration and to grow the sector and to achieve the energy's transition, of course. There's so much to potential and to see in the kingdom specifically, and we're really proud of being at the forefront of this transition.
Great, thank you, Mr. Al-Rushaid. Mark, as an active member of the ICMM, another way of collaborating is perhaps, and sort of more specific question, the convergence of standards, an enabler of more effective collaboration in future, going into next year.
Yeah, I think to flip that a little bit, the importance of the United Nations Sustainable Development Goals is really the core of that. And I think, something I try and get the ICMM to consider every day is advocating for mining, because we don't advocate enough. And we sort of hide behind everything and hide behind the fear of somebody criticizing us. And I think that's something that the Saudis have done exceptionally well in the Future Minerals Forum, is to stand up and showcase to the world what the opportunities are and how you can make a difference and not be apologetic to it. And I think there's a lesson for the developed world in that, and we've seen money being put into that investment, and we speak a lot, we complain a lot, we make excuses all the time, but we don't invest. And I think for the mining industry itself, we're our own worst enemy, because we don't do the job properly. Our projects are always over capital, twice as long, 3 times more capital, sometimes more. And then we wonder why our host countries don't always trust us. So that's why I believe that what we need to do is commit to a real partnership where, when we invest in a country's endowment, we commit to split the economic benefits on a 50-50 basis. And then if you make $1, at least people get 50%, the people of that host country. Whereas normally you might have a really great tax structure, but when you overrun in capital, you build a huge capital shield and you never pay any tax anyway. So I think there's a big responsibility for miners to do what they say and to share the economics. And at the same time, there's a responsibility for the developed world, particularly the Western world, to appreciate it's a big consumer. And it needs to invest in that consumption. So it needs to support and not always lecture the developing world, but to get involved and invest in making those parts of the world more investable for the miners, because it gets back to my partnership thing. If we don't partner in this, we're going to end up trying to explain why we don't have a planet to future generations.
Certainly resonates with me a lot. Mark, thank you. Looking at, we've heard about public sector collaboration or partnerships in Saudi. If we look at regions outside in Europe and the US specifically, maybe Brian, how can governments in Western countries help to achieve those goals that we've been speaking about? Perhaps a view on the IRA, which is always in the UK a bit of a strange abbreviation, the Inflation Reduction Act,
So we as TechMed are part owned by the US government through the DFC as the US government development funding agency. So we're entirely aligned with the interests and standards of the US and US economic allies, and therefore we have been integrally involved in how at least the US government ecosystem, and to a lesser extent that in Europe and Japan, have been increasingly prioritizing the space and looking at using tools and mechanisms to engage in accelerating how our industry needs to transform itself and balancing China's position. The IRA is a massively significant move in that direction, and a very considerable wake-up call for Europe, Japan, Korea, and others to engage, because the IRA is not only a counter climate change piece of legislation which radically accelerates investment in energy transition projects and technologies and initiatives in the US. And it's not only a counter-China initiative in terms of balancing some of that global landscape to ensure that elements of that supply chain and the development of those systems and technologies are not dependent on Chinese control, but it's also industrial protectionism, and in a way counter-Europe. And therefore, and the idea that Europe and others can rely on the US taxpayer as a global umbrella to operate under is naive. America's ultimately about US jobs and US economic growth and US competitiveness. And Europe needs to rise to that challenge and act similarly. Not necessarily similarly. It's quite difficult to out IRA the IRA, just as it's difficult to out Chinese the Chinese. One has to use one's unique strengths and position in order to compete and develop. And that's happening. It's happening slowly, and it's complicated for Brussels as it is in Washington, it is in Tokyo, to deploy government institutions and budgets which are quite clumsy tools relative to those of our competitors, namely China, which are more flexible tools to deploy in the space. But it's happening, and it has to happen a lot bigger, a lot quicker.
Yes, agreed. If we rely on that only, it'll be a very localized solution, I think. Thank you very much for that, Brian. A last question, looking into the future very much and touching on innovation. What do you think the role of technology can be to bridge the supply gap? And wearing my responsible sourcing hat in this round, I'm very interested in innovation around new battery chemistries, for example. Mark, can I ask you what your expectation is?
I think it's such a big subject, but
It is.
it goes back to education, and we don't have enough of that. We're not investing. We don't invest in mining or exploration. We don't invest in education. Certainly, the West is far behind education. I think Asia and even Central Asia has taken the lead. I often talk about the United Kingdom. It's got a huge opportunity to take center stage in the world's development. It's right in the middle of the world. It's got people work hard here. It's got some of the best educational institutions in the world. It's got more ports per running mile of coastline than any other country. But it gets obsessed with its inward-looking nationalism. And I think that's the key is, innovation requires globalization. You can't do it on your own, and that's what we've seen. We look back the last 2 decades, we reached a pinnacle in globalization, and literally in a decade and a half, we've trashed it. And we're now starting to prevent young people from the world traveling around to access the best universities in the world. And so for me, I think innovation is not AI. Innovation is smart, educated, the best in the business, applying their minds to find ways to solve problems. And I think as society, just like we need to embrace poverty and get rid of it, we need to embrace education and take away the barriers of what education can do for the future generations.
Very much agreed. Brian, maybe to you as the closing response here. I think recruitment in that case is maybe also one of the bottlenecks for the mining industry, and we heard earlier that there's a sort of an image problem maybe, and we need to speak a bit louder about that. How is your company tackling that, and what are your thoughts around what could be improved?
We certainly, as Mark mentioned, one of the constraints in the scaling of our industry to meet the growth and demand is skills and education and public awareness of how important our industry is for climate change mitigation and for industrial growth and competitiveness and jobs. So part of it is an educational challenge, and part of it is an educational development challenge. I mean, we've been a pretty unfashionable industry for quite a few decades, so it's very exciting for us to have our moment of fashionability, but it's a moment that requires many years of work in order to remedy the consequences of unfashionability over the years leading to where we are today. So there's no magic bullet or easy answer to it. As TechMet, we are luckier, I guess. We're a private group. We have 10 operating companies around North America, South America, Europe, and Africa. But we're not building and hence needing to staff the scale of projects that Barrick and some of the bigger global players have. So, I mean, we are able to be more flexible and as a private company, be a little bit more effective, I think, in recruiting the right skills and building the right structures to execute and deliver than some of our peers. But it's a massive challenge for all of us.
On that note, having looked into the future, we've come to the end of this panel discussion. It's certainly a very dynamic environment that we're in, not at all boring, so hopefully plenty of people going to join this industry in future. I would like to give the opportunity for questions now. We've got about 10 minutes of Q&A and have the audience participate.
Yeah, the gentleman over here, so I'll go to you first. And again, when you ask your question, can you give your name and the name of your company, please? Thank you, sir.
Certainly. Thank you, panel. So my name is Julian Coyne. I'm from a company, Convergio, so we do a lot of work in downstream mineral processing, digitalisation to basically do more with whatever fixed plant assets we're working with. I've got a question around, so the theme of this, bridging the disconnect to supply the metals required for the energy transition, and we've talked about skills. There's a question I've got around research. So I'm from Western Australia, and our economy has been built on successive waves: gold industry, iron ore, now the largest exporter of lithium, also largest exporter of LNG. We compete with Qatar for that. So very small population, very smart industry, good adopters of technology. But there's questions around the role that certainly we have in Western Australia of the mining companies, right? We can't do everything. We need to be world leading at providing bulk commodities, seems to have been where some people have parked the conversation. With critical minerals, we have downstream processing. So if we take heavy rare earths as an example, China has a strategic stronghold on the processing plant technologies. Some of those flow sheets take months to reach steady state. There's orders of magnitude difference. There might be tens of PhDs studying heavy rare earths downstream processing compared to the rest of the world combined. That's tens or hundreds of differences in order of magnitude on the research front. If I look at the WA School of Mines, probably competes with the Colorado School of Mines for research capability. Pyrometallurgy is something that is, it's depressing to look at. There might be one pyrometallurgist student going through that institution. And so you look at that and you say, right, everyone needs to run through the doors all at once to meet this demand in terms of critical minerals. Downstream processing is a huge part of that. I was talking to the professor who's the head of pyrometallurgy, and yeah, it made me pretty sad. He was trying to raise funds for that institution, and the largest person who donated to it wasn't industry. It was just a guy who was like, here, have, and I won't name the amount of money, but it wasn't much. And we need this more than anything. So the question for the panel is, where do you see research and research translation into industry and the investment in that coming from, and whose role is it? Is it government? Is it academia? Is it industry?
Thank you. Mark O'Brien, who would want to?
So I can, my sort of quip on that is, that's the problem with mining, is that we're much better promoters than miners, and we don't invest in our future, and it is a primary responsibility of industry to invest in technology, to the point made earlier. And so I think we've got a big challenge. You see mining engineering schools closing down. You see, chemistry schools closing down. Pyrometallurgy is the very foundation of metallurgy. So, I think we have a big responsibility for that. And also, we've got to work harder at boasting about employment just for the sake of employment and worry about skills development, because the Western world's education system is failing its future generations, just like its infrastructure. So I think there's a lot of, it's a good point you make, but it's a responsibility we have in business to support that.
Any other addition to that? No, I think there's agreement, it seems. And any other questions? I think over
Time
here.
to take one more question from the floor.
There's somebody over there.
Okay, your eyesight is better than mine, Mark. Okay, let's go to this lady at the back.
Hi, I'm Tesney Morgan. I'm a student at St Andrews. I just had a question in regards to having how the mining industry is reflected in the younger generation, so to say, and in education. Is this something that you think that mining companies themselves can be a part of the solution, or is this another talking point that everyone will discuss but can't actively help and solve?
Thank you. We've heard from Mark on this. Maybe Brian?
No, certainly industry can and to an extent does, but needs to do to a much greater extent, provide financial support for educational institutions and bursaries for individuals participating in educational institutions to contribute towards radically scaling the skill base to allow our industry to do what it needs to do to transform and scale supply. So there's a lot that industry is doing, but a lot more that industry could be doing and should be doing. And we can't rely on the markets, and therefore there's a lot that government needs to be doing to guide institutions and guide industry in the direction of doing a lot more.
So I want to say, it's fantastic to see you here today. We need more of you. You are the future of this industry. And we in Barrick, we spend a lot of time. We've decided we're not going to chase that aging, diminishing pot of mining skills. And we're going to go and invest in the young people who will lead us to a different place, drive innovation, to your point, really change the industry and hold us to account. And so, are you still at university? Yes, I'm in my final master's year. And what you studying? Geology. Pitch it out. Come round to our booth and we'll chat to you.
Sounds like you've got a job. Congratulations.
Okay, all right.
Just a quick coda to that. As ever, I find myself parroting Mark Bristow because he always says it first and best. But fantastic to have young people here and students, particularly geology students, obviously. The only point I was going to make is I think, obviously, there's a very substantial education problem for the mining industry, as for the energy industry, particularly in the first world, which are consumer societies. And I'm not, but they are post-agricultural and post-industrial. So people don't know about the industrial processes. They don't relate these materials to what they use to transport themselves, live in, and all the rest. I think the industry could do worse than take a leaf out of the farming and food processing industries to relate to young people, consumers, the relevance of what they're doing to their daily lives and where things come from, how they end up in the products they're using. And that would lead to much better understanding and acceptance of the industry and their importance.
I think we can take a big book out of the oil and gas people as well, because, we've really, the oil and gas have really, after BP spill in Gulf of Texas, really woke up to being more efficient, more innovative, more engaging, more promotional, more educational, and so there are a lot of people we can learn from. As miners, and I think I definitely take your point. We need to,
including the innovation.
educate.
That's where the food and farming industries have been very good.
And if I can just go and chip in here, I actually went to St Andrews University, so I was really happy to see a question from the audience from St Andrews University. And I guess just as a little bit of a plug as well, we have over 150 students registered for the conference, not just from St Andrews, not just from Imperial, but from about 20 or so different universities all over the United Kingdom, and also some from Europe. So we welcome you all over the course of the next 3 days. I think we have run out of time for the panel. I think it was an absolutely fantastic and instructive panel. So can we please give a warm round of applause for our panelists? Thank you very much.
Good job.